Hello everyone, good evening. Thanks for joining. So before we continue with our P3 sessions today, if you have any doubt. Yes, Mr. Parker.
I just started reading the material.
Okay.
I got this doubt. I just want to know, is it something different? We have to be more quote everything. I'm sorry. Quote any sections law like that, and also it has to be a little different compared to MCS, or the level or the quantity what we are going to write here, will that be the same way what we did for MCS?
Right. You mean in terms of quantity? I think it's pretty much the same. So if you target, let's say 50%, 5 paragraphs, that's enough. In fact, here things might get a little easier because you have only 3 tasks. Technically, if you're comparing this to management case study where we have 4 tasks and usually 2 subtasks, it was 8 questions.
Correct.
But now it has come down to 3.
And 3 6 questions, is it?
Questions. Sorry?
6 questions. Three questions means each question has got 2 subtasks. So we will end up writing 6 questions, answers.
Yes.
Okay.
So that way it becomes easier. Anything else?
No.
So did you guys go through this? I was expecting you to read a bit before you come here.
Yes, Misbah.
Have you gone through?
Yes, Misbah.
Okay, what did you read?
Actually, I went through the recordings instead of like reading. I'll be very honest.
That's perfect. That's even better. Ideally, I wanted you guys to go with the recordings only. Nice. And how many chapters you have done?
Approximately, I have done 7 chapters, Misbah. Internal audit. I think I'm on internal audit.
You're on internal audit. Okay.
Yeah.
Nice. Right. What about others? Okay. Others have you done or not? Akshay, Mohammad Imtiaz, Shabakar, Sutol.
I just started before the class. When I started reading, I was not in a place, so I came back. So I'll make it.
Okay. What about Mr. Samir?
I'm going to throw the top of the log at you.
No, Salam. Hello.
Yes,
You
Mr.
hear me?
Samir. Yeah.
Yeah, I'm there.
I was asking, did you read the chapters 3, 4, and 5?
Yeah. Yes.
Very good. Okay. The reason I am requesting you guys to read it before you come, or ideally watch the recordings. I have given you the recordings. It's like around 30 minutes per chapter, and that will only clear 90% of your doubt, and you'll be ready. And now the 10% we'll do in discussion. Primarily, I want to have the best use of your time. I know all of you are working and very busy professionals. Most of you are very senior person. So if you come in the session, it should not be just about the concept, but in the session itself, we should be able to understand what type of topics can be asked from here and what should be our answer. So we are finishing it completely. I know the pre-scene is not out yet, but we have an idea what kind of topic can come from there. So this will be a very, very smart move. Instead of spending like 4-6 hours for that, within this 2 hours, you can do a great job. And obviously, if you want, you can make notes. You have recordings, all of this. Rather, if you're coming blank, it might be a little difficult, And most of the time, we have seen the questions from that each topic are repetitive. Maybe the industry can change, but what type of questions they ask from that particular topic remain the same. So we can work smart and save our time. That is the main aim. Okay. Yes, Sithol, you are saying something?
Yeah, I was saying it. I think from my side, we spoke on WhatsApp. I was asking for material. So I started from the beginning. When yesterday you were saying we need to read 3 and 4.
Yeah.
But I thought, let me start. But I'll cover this evening 3 and 4 because I wanted to start from chapter 1.
Got it. No problem.
Because I got the material yesterday. I think yes.
No problem. Thank you. Thanks for the update.
Okay.
Okay. So in the last session, we were at strategic risk. We have started here. We have discussed what is strategy, what is strategic planning, corporate level, business level, function level difference. This is extremely important. Then obviously we look at the rational model. That was about long-term planning, short-term planning. Remember? What the advantage and disadvantage of thing. And we were discussing the stages. This is very important about the choices we can make. Traditional approach, market-led approach, resource-based approach. This is ultimate. This is very important. Though we are in P3, but if you bring in a little bit of E3, E3 is about strategy. This one page is covering almost half of our E3. The approaches to strategic planning, whether we should do traditional, market-led, resource-based. Obviously, we talk about Porter's generic strategies, Ansoff matrix, organic versus inorganic. I think it should be clear as you guys said. But before we move forward, I have a quick question. Anyone can answer. This will be a revision and it will give us confidence. Does our strategy will be changing if we have B2B versus B2C? I know you guys gave an answer in the last session, like most of you are saying we should go with market-led or traditional approach. Will your answer change if you are business to business rather than business to consumer? As we have seen, mostly CIMA is asking business to consumer directly. But time we have seen in the past, we are doing B2B, business to business. So do you think that time the strategy should change and why? Just a logical answer. Why this question comes up? Because usually when you are B2B, you have less number of clients and they are giving more percentage of revenue. You might have a single client giving you 10% of the revenue. But when you are business to consumer, maybe a single client is giving you less than 1% or 0.01% of your revenue. So the power of consumer, the power of customer is very low. Usually, I'm saying. So will it affect your strategy?
See, definitely strategies will change according to the business model, because when you have to focus with different types of consumers, the way we approach and what sales we do, how we deal with the customers and how we manage the whole business or operation is different when we have only selected number of people, which is like focus on business to business model. That's the point we have to build on.
How will you place the first one? Traditional, market-led and resource-based. Which one you will go if it is B2B? Like you are working in a company which deals with B2B, am I correct? Chabagar?
Right.
So how it is different from direct to consumer business?
The understanding what I have is, now when you say business to business, it is like specific customers and specific crowd people. This line of customer business. But when we have a business to customer, where the base is bigger and very varied one, hence it will be more towards looking at market-led analysis and traditional approach combination will help us to them rather than going with the resource-based.
Got it.
Maybe
We'll go more into resource. because here we might not have so much pressure of market, because usually every business is separate, isn't it?
Right.
The things will be very much tailored when we are into B2B compared to B2C. B2C, we try to standardize. Okay, makes sense. So we can continue. Now, today we will start with this non-for-profit organization. So when you make strategy, we usually think that, okay, we are for profit. And as we know in your SCS, usually I have not seen any case study coming where we are a non-for-profit organization. Though CIMA is, non-for-profit. So basically, we need to understand how the NFPs work, because we might not be one of the non-for-profit, but we are dealing with the non-for-profit. Let's say when we come up with a stakeholder list. So in stakeholder, we have non-for-profit. And nowadays, this NFPs are getting a lot of power and interest. Reason because government concern on the environment, let's say environmental group. So government is giving them power, and social media is giving them power and attention. And overall, the population, the people in general, is getting attracted towards the company who is more sustainable. In fact, if companies are using just the word sustainable, if you see a lot of documentaries, actually the company is not recycling themselves, but they are using the word sustainable, and they are getting good business, or they're improving their perceived value, higher perceived value. So that is one of the example why non-for-profit and understanding how they work is very important for us. Let's say in our organization, we use a lot of energy, and because of that energy, it might affect the energy cost to go up in the society. So again, that can lead to a problem. It may not be environmental group, but the social groups can come. But how you manage them, it can be very important. Okay, what type of question can come from here? So there was a scenario in the past where they said the local environmental groups have blocked our production. And secondly, we are considering to make them a key stakeholder, or whether they are asking, evaluate, can we have this stakeholder as a key stakeholder? What is key stakeholder? Somebody who has high interest and power, just like board of directors. That means every time we do something, we need their kind of approval, or at least we need their satisfaction. And obviously, when you say that, that means we are compromising on profit, we are compromising on our market-led or traditional approach, which can be a problem. Or what companies are doing otherwise, making them as a non-executive director. So if you have already one person as non-executive director, so is coming from this background, they can manage them properly. Okay. The why should be very clear. This may involve charities, councils, schools, hospitals, and other organizations. So when we say school and hospital, private school and private hospital, obviously they can be for profit. But this is the government or non-for-profits. Their profit is not the main objective. So if profit is not the main objective, then why they are operating? They might have multiple objectives. Like they want to benefit the society, they want to benefit the specific people, specific stakeholder. And many times what happens, the people who are paying for it is not the same person who is receiving the service. So that times it becomes very challenging. For example, if you see CIMA is like also non-for-profit, but if we are paying the fees, if we are going for the exam, we are the one paying the fees and we are getting the service, isn't it? But in certain cases, in charities, you might be paying for it and somebody else in some part of the world is getting benefit out of it. It's very difficult to measure that benefit. Therefore, we can use 3 E's for that. First is economy, then efficiency and effectiveness. Economy is basically the input, how much resources we are putting in, how much money we are putting. So economy, we need to find an economic options and see, did we utilize the best for that resources? For example, we cannot go for luxury products. We might have to use more costly products, more beneficial products. Yes, Anurag.
Yeah, Misbah. So these 3 E's can also be like help in the profit, like the normal business, in the normal business as well, because here specifically it is mentioned in the not-for-profit organizations, although, but we can see these threes in the profitable organizations? No?
Yes, yes, you can definitely see, because as a profitable organization also you need to be economic, you need to be efficient, you need to be effective, right? It
Exactly.
is like an upside risk. It is adding value only.
Yes, yes.
But can a for profit depend completely on that? No, because
No,
ultimately
not
their
at all.
numbers matters. Because
Yes.
shareholders are not looking at that. They're saying, okay, this is fine. How much profit you make? Tell me. How much
Mhm.
dividend you are paying us? But here, even if you show profit, it might not help.
Exactly.
Ultimately, we have to take this back. First is economy, then efficiency, the best use of that resources. Basically, input and output. The output should be there, and effectiveness is like how well we did. For example, if it is a school, economy can be like number of students that has enrolled. Let's say 100 students. Then efficiency is out of 100, how many of them have passed? Let's say 80 students, 80 out of 100, 80%. Now effectiveness is out of that 80, how many of them have scored grade A or got a distinction? Let's say out of 80, 50 students. So efficiency is 80% and effectiveness is 50%. The biggest problem that can come in this is effectiveness and economy can be opposite. Well, if you want more effectiveness, let's say instead of 50%, you want 90% effectiveness. So what will happen? You have to give more, or you have to control the economy. So what you can do, instead of 100, just give 50 students. Or give more financial resources, human resources and all, then effectiveness can increase. So many times economy and effectiveness can be in a opposite direction. Therefore, with this non-for-profit, they want to focus more on economy, and definitely the effectiveness get compromised. The private player can have an edge on them because they are charging and they can utilize more resources. Or sometime the other E, one more E can come in, that is equity. How many people have access to it? Like purposely, if we are giving access to less people or less locations, we can obviously show more effectiveness. So many businesses, they might pass in economy and efficiency, fail in effectiveness, or instead of business, we can say organization. Some of them will fail in economy and they'll pass in efficiency and effectiveness. So this can give very confusing result.
Mhm.
How we have to look at it is, this is their goal as a non-for-profit. So let's say in order to maintain the relationship with them, we know they are struggling with the resources, so we can sponsor them. So what will happen if you sponsor them? You are building relationship with them. So at least they might not go against you. This might sound little unethical, but we have to help them in such a way that our relationship improves. Especially if you're into an industry that is affecting them directly. Is that clear, everyone?
Yeah, Misbah.
So what is the risk associated with the three is the wrong choice of measure, as we discussed. Just because you can measure something doesn't mean you should. The measure can give contradictory result. If you're prioritizing one, other can go over. Internal confusion over which measure to prioritize, leading to demotivated workers and all measure being missed. Economy and efficiency can be conflict with effectiveness. Excuse me. Then economy and efficiency are easier to measure than the effectiveness. Because ultimately effectiveness can matter. That's what people can question. Therefore, if you see, there are like hundreds of thousands of these charities and all. But are they famous? Are they getting funds? No. Just like for-profit companies are competing with each other, this non-for-profit is also competing with other non-for-profit. Let's say government want to give grant, companies want to pay them under CSR or funds, but not every organization will get it. So they are also competing with other non-for-profits. Because let's say if you have to decide which one to choose, let's say it's environmental group, which one you'll choose? The one which has the higher effectiveness, the one which has a higher brand, a better goodwill in the market, right? And ultimately, it should benefit us also. So we'll also look at this effectiveness. Instead of going just with the word effectiveness, you guys can tell me what are the factors you will look at it. Let's say we have to, our business involved some environmental footprint, or let's say a good environmental footprint, and now we think that this might lead to a reputational risk. That's what our next chapter is. It's very important. So what are the factors you look at it before you select which environmental groups to go? Let's say you are located in a country where you have maybe, let's say, 10 good organizations who are doing it, 10 international companies, organizations, 10 international organizations. Which one you will choose, or what are the factors you will be looking at? Just tell me one point. All of you can give me 1 point each. Which is a key point for you?
You-
Yeah, Anurag,
You can see less carbon footprints.
from them.
Yes.
So you're saying they themselves can have a lot of carbon footprint, so you'll choose the one which has the lowest one. Is that
Yes. Yes, Misbah.
you?
From
Okay.
the if we see the environment perspective, obviously the one who is like who have the lesser carbon footprints or maybe benefit more to the society in terms of the value.
Okay. Others, just one point quickly. I might say number of followers they have. Now it's a world of social media. So in social media, if they have more followers, I'll choose them. What else? Is the question clear? Akshay, Hasnain.
Can you elaborate a little bit more so that
Yeah, Mr. Rizwan. I'm saying that you are the one making a decision to work with one of the environmental groups, and you have, let's say, 10 options. So which one you will choose? Like, what will be your deciding factor if you have to select top one?
Yeah.
Like I said, it can be number of followers they have, because eventually you want to manage your reputation risk. You want to work with somebody which has obviously good following.
I agree. Okay.
So what can be your number 1 point?
What is their contribution towards the society, corporate social responsibility, and environmental protection? How much they contribute towards well? Basis that I will decide whether to do with them.
Okay. So
Some of the criteria.
I'll check. Rizwan, you can continue. I'll let you work instead.
Yeah, actually, if you ask me here, in Saudi Arabia, as I mentioned earlier, that they have started, initiated the environmental license for all every organization. So I'll go with the approved organization by the government.
you'll go with?
One of the organizations approved by the government.
Okay. That's
Yeah,
a good.
talking about myself, yeah. So because they're already tested and commissioned already.
Let's say out of 10, now you have filtered out 5 because 5 are approved by the government. What will be the
Yeah.
next point?
Out of these 5, out of the approved 5, we may go anyone which suits our financial compatibility as well. Means the rates where we agree. So because definitely the services are paid, and so those are and what are the feasible, what are the what are available in our region as per geographical. So and maybe some of them are related to our business also. So like if in healthcare you ask me, the organization which are recycling the medical waste, or they are collecting the medical waste timely and correctly. One of those I will select.
Okay. Makes sense. If they're already part of the ecosystem, part of the supply chain,
Yeah.
that might even help. Makes
Yes.
sense. Others? Yeah, Akshay, you're saying something?
Yeah, Miss. For me, I'll check like what kind of like where their expansion is in a different countries, like they have their similar entities or similar their partners in a different country. It will help me to kind of not just in my own area, it could be a marketing with others if we'll work with them. It would be easy to expand in the different terms to get the known about the market of different space areas. And I will check what government bodies or UN bodies they are connected with, so it would be give us more upper edge while selecting them if they are with UN.
Right, right. And especially if you are a multinational company, so you look for someone who's multinational. Yes. So if you do collaborate with them in one country, it can have a positive impact other places also where you do business, right?
Yeah.
Because nowadays everything is online, and when we go online, there is no borders. That goodwill can pass on to other places. Makes
Yes.
sense. Anything else? Masood, Mr. Samir, you guys have to talk. You can say, simple points like what we have done in the past. We'll see the past record, how it has helped us. Or you can say the one which is more flexible, which is ready to help us in terms of crisis. Or one which can get us good business, simple as that. So usually companies, they are doing CSR from their industry. Why? Because CSR can act as a marketing tool. That also we can talk about. Okay. Now moving on, approaches to strategic planning. I think we have already discussed this. This is the same thing repeated from here. This market-led traditional approach and everything. Okay. That cost leader differentiation, it makes a difference. It's just a little bit in detail, like what risk we have when we are cost leader, what risk we have in differentiation, obviously what benefit. If you quickly look at the risk again, cost leader means when you're selling an economic product, the risk can be no fallback if leadership position is lost, because your brand is marketed around something which is cheaper compared to other one. Cheaper not in terms of quality, but in terms of price. So it's very difficult to increase the price, because whenever somebody is coming to us, they are looking for an economic option. So for example, we have Dollar Tree, we have Pound World. Companies like that, they are focused only on the price. The organization must continually adapt to ensure unit prices are kept low and consumer needs are met. We cannot increase the price. We cannot pass on, even if we are at loss, it might be very difficult. At the same time, if you go to differentiator, let's say it's a premium brand, the risk can be, there is a need to continue innovate to defend the position. So here we are charging a premium, so we need to keep on justifying why we are charging them. Let's say your packaging is really good, so the competitors can copy. Now what you will do next? Right? Innovative logo, innovative or maybe tying up with certain celebrities, but again that can be copied. So constantly we have to come up with new innovation to justify. It may be actual higher value, or it may be just perceived value, because eventually the customers are emotional, right? And here we might be mostly into B2C, business to consumer direct. Then smaller volumes, asset costs such as marketing are higher. Usually differentiation brand, they have to market higher compared to cost leader to keep on justifying the quality. Then niching can be with the cost leader and differentiation also, targeting very specific customer, a small group of customers. If successful, it may attract the cost leader or differentiator due to potential low barriers to entry. If you're making a lot of revenue here or profits, this thing will also get attracted. This company will also get attracted. That can be a risk. If they get attracted, it's very difficult for us to survive. The other thing is, as you are targeting to a small audience, so low volumes may be sold. But basically, we can have business, but still we cannot grow it. Usually, the shareholders want us to continuously grow, so we have to diversify. We cannot just limit ourselves to specific one. Let's say we are in business to business, and in that also we are focusing only on specific type of industry. Let's say we are focusing only government as a client, B2G. Industry plus the government, it can be a very small niche. Like here they have given the example. Niching can be done by specialization, by location, types of end user, product or product line, quality, price, size of customer, product feature, all of this. Any question on this? Okay. Now next, this is very interesting, and definitely a question will be there from you. I'm not saying can be there; it will be there in your exam strategy case. Ansoff matrix. Okay. So when you are an organization, you want to grow. Obviously, we are a listed company, and we have shareholders who are looking for us. So how we can grow? Companies have 4 options. Each one of them will bring in the opportunities and risk. So basically here we are talking about from the risk perspective, but we can obviously look at the returns. So first option we have is like the market penetration. What does market penetration means? It means the same product in the same market. Let's say you are in a country X and you have 15% of market share. So market penetration is now 15%, you want to make it to 20%. That becomes same product, same market. Next is market development. So if you're in country X, you feel like, okay, I can go to country Y. That is a market development. Or in country X, you are focusing only on one category. You are coming up with other category. Let's say you are selling men clothes, now you're selling women clothes. Or if you are offline, you have become online. That is a market development. The other thing is product development. So in country X, you are selling some kind of product. Now you're selling some more products. Let's say electronics, you are selling mobile phones. Now you're selling laptops. That becomes a product development. Then diversification. Diversification can be related or unrelated. Let's say from phone you are making batteries now. It's the same supply chain. Or from phone now you are going in totally different. Let's say you are selling clothes. You're making clothes. That's totally different. That is unrelated diversification. So these are the growth opportunities we have. That is called Ansoff matrix. So how to decide whether it is market penetration, market development, product development, or diversification? It depends on the board of directors. Eventually, if you see any big corporate, where we call them a conglomerate. Conglomerate is where there are different industries. They are doing mix of all of this. Getting penetration also, development also, product development also, and diversification also. So usually in your exams, majority of the time, there is a question about market development or product development. They might ask you, evaluate the project. The project can be for the market development or for the product development. So what we'll do smartly, you know how we can predict an exam question. Once we know our business, once we know in the industry, we'll understand what kind of trend is going on in that sector. And based on the trend, we'll make some options for market development and we'll make some options for product development. If possible, maybe diversification also. So we'll already know what type of question can come and we can have our pointers ready. And to understand that, we'll do a session on industry analysis. And in industry analysis, we'll look at the real world competitors, what they are doing. And we know the similar thing can be asked for us. Make sense? So if you go a little bit deep, what is market penetration? It is considered when overall market is growing. So this is very important. Let's say if the current market is 2 billion and it is growing at 10% CAGR, compound annual growth rate. So it will become 2.2, then it will become 2.42 or something like that. It will keep on going up. Then this will help. Imagine the market is saturated and you are doing penetration. It won't work. If new customers are not coming up, the only way to get customers is to take away from the competitors. And obviously it can be challenging. It makes sense. Then market not saturated, competitors living or weak, strong brand presence by your company with established reputation. Your brand is really good. So marketing can help. Strong market capabilities exist within your company. You have that. Here, marketing is eventually important. We can say marketing or customer support, customer trust, customer loyalty. All of this can be a part of market penetration. Is there anything else? Obviously, there can be. Can you guys think of any other option? Why market penetration should be done? Or maybe you can say in which situation we should avoid it. They have said considered when. Why not we think it's not considered when? Or why it should avoid? Avoid. In which situation it's like a red signal or red flag? Okay, let me give the first point. When the margins are reducing, if the margins in your existing business in the current market with the same rate is reducing, so might not give us good return. So no need to put efforts.
Or technology downgrading, in case of technology downgrading.
Technology downgrading. Can you give an example?
Suppose, Misbah, now onwards, like EV market is going on in terms of like cars. So obviously there are no, you can say, no one can take interest in the combustion engines, you can say, or the normal petrol engines.
Okay. So
Everyone
basically, you are
want
saying
to
changing trends.
involve into the EV market.
Got it. Got it.
Yes.
Yeah. So technology downgrading, we can say there are new products coming up, innovative products coming up. So the demand itself of this product is going down. So you want a growing market, and it's actually opposite. The current market itself is going down.
It's a sunset
Sunset
industry.
industry. Yeah. Let's say if you are doing
Yes.
something with printing, physical printing, so the demand is slowing down.
Yeah.
Okay. Anything else? This is very, very, very important. 100% I'm saying, not even 98%, 100% you will have a question on this. At least one question. We'll definitely discuss on this again. But for now also you can think. We are brainstorming. We can spend some time on this. Whatever points come to your mind, you have to give just anything comes. This is brainstorming, no judging. What else? Remember, you are a senior finance manager. Technically, you have to think like a CEO because you are working at the board of directors. So don't limit yourself just from financial perspective. You are running an organization and you might have, let's say, 20, 30,000 employees working for you, or maybe 100,000 employees. So your decision will affect 100,000 families. You have built so much. That's the reason we have this risk. We have to consider risk in everything we are doing, because when you become so big, you have more to lose. Anything else? When we should avoid market penetration?
Hello, Misbah. I
Yes.
think
Hi, sir.
if the market is saturated, then there is no point of going more into it.
Right.
And also, when there is a different culture, then we will have to look at the culture of the country that we are going to expand, and then only we'll have to think about it. Otherwise, there is a possibility of failure.
Sorry, can you repeat the culture, how it will affect?
For an example, that we cannot take McDonald's to Japanese market or Chinese market, because that will fail there. So before we go for the market penetration or the market development, that we'll have to look at the culture of the country that we are going to expand our product.
Right. Obviously, yeah. If you're giving an example for market development, yes. So you need to know the culture. We are discussing about penetration, but it's fine. You start with market development. So if you look at market development now, what happens here? Aim is to increase sales by taking the present product to a new market. When we say present product to a new market, obviously it's not copy paste. You have given the example of a fast food company. So there you might have to change the flavor. We need to change the cuisine. We need to change the pricing. We need to add local options. Slight product modifications may be needed. Advertising in different media in different ways. For example, if you're going to Saudi market, Twitter is very much followed. In certain countries, it might be TikTok. Depend. Research, primary research at this point gives significance of the investment. This is very important. Again, research how big the market is. Are you getting the ROI, return on investment? The company is structured to produce one product, and high switching costs exist for transfer to other products. This can be another thing. Strong marketing ability is needed, usually coupled with established brand backing. So if you're going in a place where your brand is already aware, then it might make sense. Otherwise, to start from the scratch, it might be challenging. Therefore, companies
Such as
might choose a neighboring countries. Sorry, Anurag?
such as BYD, Misbah, because in China it has almost more than 50% share. So now it's exploring the market of other markets.
Yes. They have become a global giant. They are the industry leader.
Just one quick question from me in terms of the market penetration. So obvious I'm just thinking ahead in terms of the exam perspective. Is it possible that probably they ask this market penetration? For example, I'm in South Africa. I just want to penetrate the market in locally in South Africa, or they tend to mix both local, or you want to penetrate internationally or outside of South Africa, maybe to India or China also. So probably obvious in terms of your risk assessment, it might slightly differ, and the exposure of those risks, it might slightly differ when you do local to local and probably you do local to international. I mean, one of the risks that also you need to look at your currency exposure, the laws of the countries, political exposure. I mean, obviously, the pastel will come in there.
Right. So what's your question?
Just saying, I'm looking in terms of, as I said, I'm it's for the first time I'm writing a case study. Probably in terms of when I look at the model itself.
Right.
When you think out of the box, obviously they will say market penetration. Obvious on the case study issue, it's a local to local or a local to international. So what are kind of risks that you look at? So obviously you want to look at in terms of, is it easy to penetrate the market? Obviously based on the research that probably the marketing team have done in terms of whether they can market the product in a particular country or something, but there are quite a number of risks that you can look at.
Right. Obviously, we'll follow different strategies, penetration and development. And many companies do both of them simultaneously because they want a massive growth. They have pressure from shareholders and other stakeholders, and they have funds. So why they want to limit? There are a lot of cases where companies are doing all four together. They are doing penetration also, development also. I mean, market development, product development, and diversification as well. And they'll have a different departments taking care of it. Ultimately, it depends on the risk appetite of the organization, how much they are ready to accept. Right? Okay. Now, if you go to product development, this is becoming even more important because you want to have more control on the supply chain. In today's world, where we are seeing companies are seeing increased risk, it's not only just because of geopolitical situation, but the price of raw material is going up, and you have issues with the suppliers or the logistic businesses or the logistic cost. So they want to have a product which is a part of the supply chain, so they can have more control and it can give them more surety or reduce risk. Plus, eventually it can help us to get a better margin. Like we just discussed about BYD. BYD is the one who is having their own manufacturing. They make their own batteries. They have a lot of raw materials which are required to make their cars is coming from their own factories. So they have done a product development. And in fact, through this product development, they have created a new business altogether. Their products, what they develop for themselves, they are selling it to competitors. So a lot of companies who make EVs, for example, Tesla, is using BYD products. So if you buy Tesla or you buy BYD, in both, BYD is making money. They are getting revenue. Plus, it is helping them to have a competitive edge in the market. So key notes here, the company needs to be innovative and strong in R&D, research and development, and have an established, reliable marketing database. Marketing is very important, whether you're doing product and all. Why marketing is important, or especially they are using the word database, because we should know there is a demand for the product. The worst case can be we have come up with a new product and there is no demand for that product. Or sometimes the product has launched before time and the market is not ready. That can be a problem, isn't it? Constant innovation allows for the developing sophistication of consumers and customers and ensure that any product-related competitive advantage is maintained. And what is the downside for this? The downside is a lot of time the R&D is failed. R&D is expensive. Companies are reluctant to invest in research and development, especially if you see small and medium companies. They want other companies to come up with something which is successful, which is accepted by the market. Then they will do the reverse engineering. Not every company wants to invest so much in R&D, because if it is not successful, it will just be an expense. So let's wait for somebody to do it and we can copy that. That's also a good strategy. So what do you think, in which cases you want to go ahead with the product development? Let's say you have to select product development. Maybe you have to just select one out of these four and you are selecting product development. So what is that scenario? And how you'll manage that risk arising by choosing this?
So, Misbah, product development can also be considered when the you can say customers are of the different nature, such as price sensitive in nature. Because if we can take an example of Samsung is also producing the phone of the you can say a premium one as well as budgeted ones. So the price sensitive, in terms of price sensitive customer base, we can have the different products from the same company.
Right, that's a good point. So if you have customers who are price sensitive, so or maybe we can say we are having products with differentiation also, then cost leader also, or niche also.
Yes.
We are targeting all customer segments. Yeah, all categories. But maybe you have to do a branding, different branding.
Yes.
Like Samsung, you are saying, but Samsung has a different branding for specific models. Like S series and all, they made more on differentiation. Then they have their entry models. What else? Others? Shabakar, Hasnain. Don't be on mute. Whatever comes to your mind. Yeah, Imtiaz.
Yeah, when it comes to Sri Lanka, what McDonald did was is like they have introduced, in order to increase their target customers, what they did was is like they introduced product called Mac Rice. So to attract, based on the culture that we have in South Asian countries, especially in Sri Lanka, that our major food is like rice and curry and all. So in order to cover those customers as well, McDonald, what they did was is like they introduced Mac Rice product. It was a new product, and due to that, they've increased their target sales, and there was a massive amount of revenue that they generated.
They have their traditional one, and they have done a product development which is tailored to specific geography, and it helped them. Okay.
Sometimes
example.
also, we have to develop our product to meet the new government guidelines. Like in case of cars, we were having BS4 cars in India, and then government guidelines came for BS6. So all the companies that had to develop their product to meet the BS6 guidelines.
Right. That's a good point. So government might.
I think I agree on that one because even in South Africa, there's some, I'm in the food manufacturing, so there's some government compliance that you must have in each and every food that you manufacture. Vitamins. So you must add some vitamins into each and every one. So when you develop product, you must also take into account that there's some compliance issues in terms of that.
Right. So government regulation can motivate us to come up with a new product, or sometimes we have to change the current product and go into this one because of the changing demand. Yeah. Okay. Now diversification, new products for new market. So here we are not just doing a new product into the same market, but we are going to a new product with a new market altogether. So this can be comparatively riskier if you see. If you look from risk perspective, market penetration is the lowest risk. Then product development is the second lowest risk. Then we have market development number 3 and diversification number 4. Any diversification, if it is unrelated, it can become number 5. So new products for new markets, the company has excess cash and powerful shareholders. Why excess cash? They are saying because we have the higher risk capacity. Right? Or we are trying to just stretch our brands. We are going into new areas. At least some base will have. Then only we'll go into this category. Because here you are not aware of the market also, plus you are not aware of this or experience with this new product. So this obviously can be risky. The chance of success will be lower than the other categories. Possible to brand stretch and benefit from past advertising and promotion in other SBUs. Decision promises greater returns and can spread risk by removing the dependency on one product. So eventually when an organization grows, this strategy is used to mitigate the industry level risk. For example, companies want to go in basic necessity, as we discussed in the last session also. They want to go in healthcare, they want to go in FMCG, education, or medicine, like pharma. There, the revenues are stable. That might be a risk management. Or even if they don't go to that basic necessity, that kind of industry, they just want to be in different industries. Because if one industry goes down, if an industry level risk, which nobody can do anything with, in other industries, they are getting their revenues up and running. Or sometime they'll try to be in the industry which is solving the same problem. Let's say if you're into logistics, you want to be in with the last mile also, and maybe you can have your own private aircrafts, mix of all. And if you see in the real world also, most of the top companies, they have become conglomerate because they know they need to manage the risk. Or sometimes they are so successful here, whenever a new industry is coming up, obviously they have enough cash and resources, they will do the market research and they'll have the first mover advantage. But at the same time, it can be very risky. It can backfire. You might lose, obviously, the new market, what you're doing, and you might lose what you have already established. Plus, there is some theory that shareholders, they are clever enough and they have flexibility enough to invest in a new industry. Now, why you are doing their job? And they are not the one, they are putting money only in your business. They might have selected 10 different companies. So why you want to go in 10 different industries? They'll go to the 10 different expert companies in that sector, right? Why you want to go from your side? So that might also make sense. At the other hand, the argument can be the companies want to survive. If they are not diversified, and if the industry level risk comes in, they are collapse. So to keep this company run and up and running, we need to be in different industries. Because as we grow, the level of risk we face and how we are planning our risk management is totally different. Like in COVID time, we have seen airline industries. So airline companies which were diversified, for them it was easy to survive than the other airline companies who are just into one industry. So what do you think if that question comes up, whether we should diversify or not? And again, diversification can be in the same industry also, because there you can stretch the brand. Let's say we are into pharma, we are making some kind of medicine and we have a good brand. Let's say GS, you are coming up with something new, it might help. So do you think we should diversify? If yes, within our industry or outside the industry? Or we should just leave this to shareholders? Focus on one industry and be an expert in that. Remember, in strategy, there is no right and wrong answer. How you justify, you will get marks. In exam, all of your answers can be correct. CIMA has said officially that for one question, we can have hundreds of correct answers. How you justify, this is where the differentiation comes in. Therefore, I am asking every time why.
So diversification, of course, is possible within industries is more more relevant actually. If you ask me. And sorry, I just missed. Maybe it is some specific industry you are talking about, or any industry?
No,
you're talking
general.
about? And
You
general,
can give your
yeah,
industry example, your company example
Yeah.
also. Anything.
In my company example, in my industry example is that one of my friends is working in finance, also healthcare finance, and what they did, they were having challenges of in their software, in their ERP. What they did, they developed their ERP and they started selling it out as well at the same time. So they added a product. They changed their field, not to change their field. They added the whole product itself. So
Right.
it helped them a lot, and then it opened the whole line. It diversified their business as well, from healthcare to tech as well. So this is an example of diversification.
So your company, the parent group, are they diversified or they are into just healthcare? And within healthcare, also, like obviously it's a very big industry. Are they diversified? I'm sure they should be. And how they decide that?
If you ask my company, that is not diversified actually. They are very specific, even in healthcare. I'm talking about another section, like one of my friends. We were doing this. They were working in healthcare, in general healthcare. We are in specified healthcare actually. So they had some challenges in the ERP. They were not getting this to the point yet of EMR and the whole solution altogether. They created their own solution and started selling them out again.
Okay.
This is the diversity, I believe.
They are working on their kind of niche.
Yeah. They added another niche concept.
Got it. Yeah, Mr. Samir.
Yeah, Musbah, regarding the business, we call it here, it's like the company, if they're thinking to diverse any business, they shift themselves from the, what you call it, move the company or the management from the comfort zone to the stress zone. That's very typical when they go for any diversification, I mean, and especially in the investment industry, because you as we call it, you cannot keep your eggs in one basket. So you have to keep diverse from here and there because you want to keep running the portfolio or the investment. So I'm talking from the investment perspective. But here we have like talking about an industry, that's a good example. I worked in a company where they are doing ICT project, ICT, IT,
Okay.
and the new trend came with the cyber security. Okay, and we were thinking how to develop that concept in the business, and we started hosting that cyber security, services to third party, and later on we start to develop that concept inside the company, where we build the data center, we build the cyber security, we build the monitoring and penetration and all this stuff inside the cyber security center. And now we are selling a cyber security services. Okay. So we can say this is an excellent diverse in the business. But that's also need to consider the capital and the money invested in that action, or what you call it, diverse the business, especially if it's a new line. So it's required. For diverse the business, you need also for it's need an investment. We call it. It's need an investment, and it should be aligned. Shareholder alignment with that concept also. So that's the whole idea about the diversity in the business.
All right. Shareholder should align. Obviously, when we say finance, it's not about just putting in money; it's the risk involved. There is always a chance we'll fail in that.
Yes, of course, 100%. Diversification. It's not an action you want to take. It's need a study for that, because you need to keep a capital, you need to keep resources, you need to make a plan for it. It's a long-term plan or short-term plan. It's need a lot of investment on it.
Right.
By the way, as from my humble experience, a lot of companies fail in that stage.
They fail to diversify successfully.
Yes. And they want to diversify business or product or something. They fail in that because they didn't take the proper strategy or thinking how they want to work in it. So that's why I'm calling it. It's need a capital reserve. It's need a
How we can
shareholder
manage that?
alliance.
That's a good point you have taken out. Most of them will fail.
Yes.
So, how we can mitigate that risk? How companies can mitigate that risk?
Yeah, but this is what I'm telling you. That's what I'm telling you from the beginning. It's need a capital reserve. It's need a shareholder alignment. It's need a strategy plan. It's not only I want to diversify my business. No. And especially there is some companies, they exit from a certain product, certain industry, and they slowly pull themselves to another business. And this is what we call the smart way of exit. And it's part of the diverse also in the business.
Right. And if we have our own reserves, that time also risk will reduce. Rather than if you're taking loan. You're taking outside money, the pressure will build up, and we might take up more risk just to give the returns or cover up that.
Yeah, of course. And especially here we have so many, some finance people, here with us also. When we start any acquisition or any business, which is diverse also, normally we use a formula. I think the majority of the friends here, the gentlemen, we have something called the WACC, like a weighted average cost of capital, because that also it's because you want to diversify your business, so you have to make some calculation, and that calculation will give you a guideline. So this is one of the risk mitigation also. You have to calculate it and see exactly that it's possible. OPEX also. There is so many factors. The diversification is not a simple word.
Right.
It's needed smart thinking, high level management thinking, high caliber people who think about that.
Especially in this exam, they'll give us very less information. So based on that, we have to decide. So what we can do, obviously, here is look at the industry, look at what other players are doing. If everyone is diversified or most of them are diversified, so I think it can be a good idea for us. We can always learn from our competitors. But keep thinking about it. Okay, this chart should be one of your models. Write it down. Don't just stop thinking once we are done here. Okay, just to add on, diversification can be related unrelated, as we discussed. Unrelated can be more risky. Okay, as we have already talked, no need to go in again. Now, acquisition. Acquisition is another thing. We'll see this in detail with the numbers when we are doing F3, financial strategy. But just for now, when we want to grow, okay, so we have usually three options. First is acquire, especially we just talk about diversification, or we talk about market development, or we talk about even in product development with small changes. That time, well-established companies, they want to acquire other business. Acquisition refers to a corporate action which a company buys most, if not all, of the target company's ownership stake to assume control of the target firm. We don't want to go on our own because it might take a lot of time. So rather than we pay a premium and just take off the business. In other times, what we can do a merger. In acquisition, let's say company A is acquiring B, then the existence of B is gone. It's just company A. But in merger, A and B, if they are merging, it will become AB company. There will be a establishment of a new company. So mergers are business combinations that result from the creation of a new reporting entity formed by the combining parties. And organic growth, on the other hand, is totally different. Here we call it M&A also, merger and acquisition, because most of the things to look at is very similar. The calculations, the advantage and disadvantage, but organic is totally different. Organic, the word organic is like you're doing on your own. This might be the slowest process. This we are doing when we don't have resources, or if you are a startup. It might be lower risky, but it might take ages. It might take very long. You'll not see any successful company, they are going for organic in most of the cases because they don't have time. So organic growth is a growth through internally generated projects such as increased output, customer base expansion, or new product development. So usually what type of question is asked for us in strategic case studies? We are going for a new market and we are trying to acquire a local business there. When I say local, it might not be a small business, but they have established network in that geography. So instead of us going and doing everything on our own, we just acquire them. And they'll ask, evaluate the project, look at the suitability, acceptability, and feasibility of that. Or sometimes they'll ask to do the valuation of that. Which kind of business valuation will work? What are the advantages of that? Whether it's cash based, asset based, earning based, cash flow based. So everything is interlinked. We are studying P3, but we are talking about E3. The strategy is all about E3. We are talking about F3. So don't think about one topic. Try to interlink. Even if somebody is writing individual paper, no, they think only it's about risk. But you should have an overall idea how things are connected. Then you should apply to the scenario. Because many times, let's say balance scorecard. Balance scorecard is a topic which is there in E3 also, P3 also, F3 also, and the case study also. So student will be confused, okay, where it is from. It is from everywhere. We have to have an holistic thinking. Okay, quickly, if you look at the benefits versus the risk involved when you go for M&A, high speed access to resources, an acquisition can provide a powerful brand name that could take years to establish through internal growth. So this years have been saved. Avoid barrier to entry. Many places is very difficult to enter even if you're ready to pay that money. Let's say if an airline company want to get a landing slot at Heathrow Airport, extremely difficult. Dubai Airport, extremely difficult. What they can do, there has been cases where companies, airlines have acquired small airline companies just because they have a landing slot at particular airport. So barrier to entry. Then less reaction from competitors. Competitors are a little bit stuck. They don't know what to do. The competitor is still there, just the ownership has changed. It can block a competitor. It can give us a competitive edge, you can say. For example, if Kingfisher bids for Asda had been successful, it would have denied Walmart's easy access to the UK. Help restructure the operating environment. It can help. P ratio, technically the valuation of overall business can also go up. Asset valuation, you can get more asset, or sometimes it can reduce the tax liability. Companies are acquiring a loss-making company, so they can whatever profit they have, they can pass on to that and overall pay less tax to the government. That can be the benefit. Risk involved, more costly. You have to pay a premium. The target company will not sell for a market price, and many times the market price itself is very high because it is considered on the future profit, not on the current profit. Cultural mismatch, this is the number one reason. Sometimes they'll ask you a simple and straightforward question. What are the reasons that this acquisition can fail? Or what are the risks involved? Or what are the issues we should be aware of before going ahead with this acquisition? You can give this point. You can say we can end up paying more, costly. There can be cultural mismatch. We might have to forcefully dispose of certain assets. Lack of knowledge, especially if it is diversification, we might not have knowledge. Or if it is a product development, we might not know about that product, even if it is into that industry. Let's say we have acquired our supplier. Okay, it can help. But do you know how to run that business? Do you have that expertise at the board? So sometimes what we'll do, when we are going for this, we'll see what expertise we have on the board. And based on that, we'll do the acquisition. Let's say we have one of the directors who worked there for, let's say, 5-10 years. So that expertise will have. Reduction in return on capital employed. Sales and profit volume can add, but return on capital employed can be. What do you think can be the biggest benefit and risk according to you guys? We have been talking about all this growth and everything. Which can be the biggest one? Think about the logical point.
Hi, Misma. The biggest benefit will be like easy access to a new market.
Okay.
Or a new country or new geographical region.
Right.
Easy entrance into that.
Because everything is set up.
Where everything is set up, and yes.
You are up and running the first month.
Exactly.
Otherwise, it might take years. And even it might take years, and there is no guarantee that you will reach to that point.
Exactly.
Because
And
companies take or go through phases. Yeah.
and there is a regulatory and I can say the cultural risk. I've seen organizations take years and years to settle down, to get those regulatory issues solved and culturally fit.
And what can be the risk? Or
So
we can just say the downside.
The time they're taking, it's too long actually. The time is everything. So if they're taking too long to settle their regulatory matters, it will they will lose the business.
Right.
That's the main thing. So the time actually ultimately they will do if they stay consistent, they will achieve those regulatory goals. But if they take longer time, other competitors will gain the business. Like some three organizations, they go to the new countries to target one of the government tenders itself. And in that tenders, definitely the other competitors are also there. If they're already settled and they need to take time, they will take time to get settled regulatory matters. Then definitely they will lose the business, and the whole transition will be in waste.
Okay. Anything else? Others?
Musbah, can you repeat your question, please?
I'm saying they have given some benefits and risk of acquisition versus the organic growth, or we can say merger and acquisition versus organic growth. Which one do you think is the biggest benefit or risk, according to you?
Okay, I got it. Acquisition, it depends, by the way. According to me, based on my let's say I'm in my field or what I'm doing right now, if I want to expand the business or something, let's say in another country, it depends on the country rule regulation. If the procedure to establish a company in that country, okay, easy, so I will establish a company. If it's difficult and complicated, okay, I will go for acquisition. That's one of the things. Second things, if I want to step in immediately into the market, okay, I will do the acquisition immediately and run I mean in a spot. So I can make the acquisition and immediately I'm inside the market. Sometimes we build in the history of that company if it's small or something like that. So it depends. This is what I'm saying. It depends. Acquisition, it's not every time you can do acquisition. Or you can start a new business, which is we call it the organic things. But acquisition is not, what I'm trying to say, it depends on how you want to do that business. You think about the acquisition or not. That's why I was thinking about your question. But exactly
right.
So, Musbah, what I'm trying to say,
yeah,
a lot of companies, especially in the United States, I think you are in Houston, right?
Yeah.
Okay. In Houston or in America, the big companies always make acquisition of the small companies because they want them to get diluted. Are you getting the point?
Right. So you are saying the geography and all of this, everything matters.
Yes, this is what I'm trying to say. Yes, 100%. The geography is matter.
Because what is good for one company in one geography, the same company, I mean the same industry, other company, it might be totally opposite.
Exactly. This is what I'm saying.
Got it.
So as per my experience, the acquisition of actually in a new country, that will be harder rather than having a little bit rather major shareholder or being shareholder itself only. If the organization is already running and we get a shareholding or either major or minor shareholding, and we start doing the business there, that is easier than acquiring an organization as 100% shareholder. That takes longer because you have to establish from scratch your organization in the country. So that takes longer, and that needs more aggressive regulatory requirements. So in that case, if we are in a that again depends what is the venture we are targeting. If we are targeting the business in long run, we can acquire and we can wait for this. But if we are not we are in a hurry, I believe that merger or taking some shareholding in a business that will be easier than acquiring the whole organization.
Right. So basically, the question from here will be about a discussion. It's very rare that they'll ask you something which is close-ended. It's more open-ended. They'll use the word evaluate, analyze. So whenever this type of questions are coming, I mean, this kind of words, they're looking from advantage and disadvantage. You don't have to give a very specific answer. Obviously, the information provided to us is also limited. So based on that, you can give the point. Yes, Ithol. You want to add something?
Yeah, I think I wanted to add to what the gentleman said now in terms of acquisition you acquire by buying a certain be a minority shareholder and probably strategically become a full control. I think we got a company as a television company which is being acquired by Canal. I mean, Canal has been a shareholder for almost 20 years, but now they are fully controlling it's a multi-choice group. But the risk is coming from the employees, because the regulation in our country is that you need to keep permanent jobs in that particular company for a certain period of time. So this is going to delay, the risk is it's going to delay the strategy of the mother company, which is Canal, because obviously they acquire that company because they have a specific strategy that they want to achieve. So those are some of the things that you need to, I think the key word here, look at the laws of the country. What does it say in terms of a foreign company acquiring a local company?
Right. That makes sense. Thank you. So everything is subjective. So only thing we can come to a conclusion is it depends. So therefore, strategy is an art. It's not a science or we can say it's a science and art both. Because when you say something is art, there is no one answer. It is very specific. Now, if you look at the next point, if you're talking about acquisition, merger, anything, we need to do a due diligence, because what might look profitable and attractive from outside, once we do a proper research, it might turn out to be totally opposite. So therefore, the next step can be the due diligence. What is due diligence? Is basically analyzing and looking at things in detail so that we don't end up in a problem. For example, areas to focus is financial statements. We can dig in deep. We'll see whether it's a strategic fit or not. Again, these are just some example. Okay, we are not concluding on that. These are the starting points. We can look at the employee and management issues they have. Let's say the team itself is not trusting each other. That means after acquisition also we can have issues. The property, what's their property they are owning, property, plant and equipment, it can have issues whether it's transferred or not. Competition commission, especially if it is a horizontal acquisition at same level and in the same market, the competition commission might not allow us. Intellectual property rights, contract review, what contract they have done with their current customers. Litigation, a lot of companies have litigation going on. The tax, how much tax they owe, what they are paying. Insurance, and obviously if it is transferable, who will be taking the responsibility. All of this can be a due diligence we need to consider. And sometimes it looks like very basic, but a lot of big companies are having trouble with it. Recently, I was speaking to one of the Airbnb director. You guys must be aware of that company. It's very successful globally, but they have made a silly mistake. They acquired one company in London just because for AI technology. Okay, and after the acquisition, the co-founder obviously left, and whatever they have paid, it was directly, indirectly for the human resource. But the key guys who did that startup, the founders, they left and they didn't get anything out of it. So they have lost millions and millions just because they don't do a proper due diligence. More about employees. They thought they can manage on their own where they don't have the expertise themselves. So we think, oh, it's obvious. But this obvious thing can be a problem in bigger companies also. So one way to mitigate risk always is doing the due diligence. Because what you are very excited about, once we do the due diligence, we feel like, okay, that's not worth it. Because a lot of time, the other companies is trying to look attractive because they are making losses. They just want to sell and go away. They doesn't have any interest that, okay, what benefit will we getting? So it's our responsibility if we're acquiring to take care of all of that. Or if you don't want to go ahead with this, we can do a joint method. What is a joint method of expansion? Like a joint venture. So here we are not coming up together. We are just for a small period of time, for a specific need, or strategic alliance, for R&D, for marketing, for supply chain issues, or franchising. Obviously, in different industries, it will work in a different way. The person of right to exploit a business brand in terms of capital sum. So if you see in hotel industry, like Hyatt and all this big brand, they don't own the property anymore. It's more like a franchise, and they are happy earning the royalties. So with less capital involved, they're getting higher returns. In fact, if you see in developed countries, it's more about franchise. If you go to different corner of that particular country, also you'll see the same brands. So it's run by different people, but the same franchise. Or licenses, like in healthcare industry, especially in medicine, if you see pharma, licenses is very successful. Outsourcing, we can just outsource. What can be the key risk if they do joint development? Strategic fit, cost sharing, knowledge sharing, profit sharing, all of this can be conflict. Especially if the joint development is between a big company and a small company, a big company can dominate. Loss of development opportunity. If you've done with your own, maybe you would have done better. Risk of international growth. This is same as they have given the chapter number 1. Political, foreign exchange, culture. We have discussed that in detail. It's just repetitive. If we talk about international growth, we can follow an exporting strategy. But the firms sell products made in its home country to buyers abroad. Like most of Chinese companies, they do this. Overseas manufacturing. International brands from developed countries, they are manufacturing in China to save it, or Taiwan, or depend in different countries to save on the cost. Multinational, like we talk about car industry, they are multinational. They are doing different things in different part of the world. Then we have transnational. This mostly theory, like a company doesn't have a country itself, but they have to register somewhere. So it's just theoretical. Now moving on to the next one, this can be interesting, disruption. We have been listening to this word very commonly now, especially when this AI has come up. The disruption is a more interesting and commonly used topic. So what it is? So in a simple word, disruption is, if you talk about a particular industry, it will change the way fundamentally how the industry operates. There will be totally a different thing. For example, when Uber comes in, they have kind of disrupted. Can you imagine now calling and booking a taxi? So can we imagine to work in that industry, not having benchmark like Uber, not having an application, not having an online payment, not having a detection or application? No. So it will change the fundamental way of doing. Or we can look at Amazon. They've also disrupted e-commerce. They have taken the experience to all together to a different level. They're even delivering on the same day, or let's say the next day or 2 days. So if you're into e-commerce, we have to do something similar to what they are doing. So in an ideal situation, we should be the one disrupting the industry. So you have that advantage. Or if not, at least we need to benchmark with others. So what are the common things that make a successful disruption? It can be the cost. Let's say, for example, now we guys are connected through WhatsApp. So WhatsApp is also a disruption. And if you guys are aware, I'm sure you are, a lot of features that WhatsApp has was there in iMessage already. FaceTime, right? Then we have audio call also in FaceTime. Technically, you can send images. All of these features were there. But iMessage is not a disruptor, but WhatsApp is. Why? So another thing is the accessibility, availability. Everybody can use Android phones. It was cheaper. It was easy to access. But Apple, on the other hand, it is expensive. Few people have access to that. So that gives us another point of disruption that firstly, it should be, obviously the cost should be very low. And secondly is the availability. Availability should be there. Then another thing in disruption, if you see, it makes things easier to use. Again, it's not like in every disruption, but we are just trying to look at the examples in the real world. It's easier to use, because if something is difficult to use, then we might not switch. The customers or the normal audience will not switch, right? Because people don't want to use a lot of intellectual in everything. They might use at work, but in other places, they don't want to go ahead with that. And what else can make a good disruption? You should have a massive difference in terms of quality. If you're moving from one to another, and if there is just a slight improvement, will you do it? Mostly no. Because usually our human mind doesn't like changes. People don't want that pain of change just because of small improvement, unless there is a very big return. For example, if you're getting a 5% increment, we might not change the jobs. It's very rare. If it is 50%, definitely. What else can make a good disruption?
The speed of delivery.
Speed of delivery.
Say like your groceries and food items. Previously, it was we had they are all doing it in 3-4 days. Now they deliver in 5 minutes, 10 minutes, made a big change in the market. That too for people, they were able to attract lower segment, senior citizens and people who don't want to go out on online ordering and getting it on time. That made a big change and disruption to the normal way of delivery of goods and sales. It had an impact. So these people are easily able to take over, right? They were able to make big time sales.
Yes, kind of. Speed. We are living in a world where we want everything quickly. Because we are consuming that kind of data and mindset is like it. For example, we don't want a 5-minute video. We want the same thing to be explained in 30 seconds. Though it is leading to superficial knowledge, but people are happy. They need everything in short. Or our attention span is also going down.
Attention span is going down. Okay.
Maybe in the future, CIMA will not have this 3-hour exam. They'll bring it down to 1 hour. Possible. Here they have given certain factors like simplicity, resources, as you said, cost, accessibility, quality, massive difference in the quality. Like you said, speed can be another thing. So disruptive innovation is a new development commonly involving advancement in tech that changes an existing market or potentially creates a new market, which leads to the replacement of an existing market and can often lead to well-known firms or products having significant drop in sales. A current market leader might go to zero because the market is not disrupted. Therefore, the things are even more riskier. And the funny part is, usually the disruption is coming from the startups. It's not a well-established brand. Well-established brand is already overwhelmed with their current business. They're managing the risk and everything. Startups are coming with a disruption. But the bigger companies are well aware of this. So therefore, they are looking out for acquisition. If they feel something is like a disruption or can be a threat in the future, they acquire their business. Therefore, if you see Unilever, Nestle in FMCG, they still dominate. Right from decades, we are seeing, right from our childhood, we have seen, and the same products, same companies are there. Why nobody new is coming? There are companies coming, but when they become big or they're on the way to become big, these companies are acquiring it. And they acquire and they throw it away. They kind of kill the company. Because they are not acquired to get something from there. Many times it's just to eliminate the competition. Or if it is a disruption, they want to own it. Like ChatGPT again is owned by Microsoft. And Meta, Facebook, they have owned Instagram and now WhatsApp and everything. They acquired it because they know this is what will be doing a disruption. Ideally, we are the one disrupting or at least survive the disruption. And how we can survive the disruption is by being a change adapt organization. We should be ready for the change. And we should keep our eyes, ears open. Technically, we should know what's happening in the industry, what can be the future. And usually disruption is coming from technology. So technology will affect different industry in a different way. For example, after COVID, the online work, online things have become more comfortable. Imagine that COVID never happened. So people dependency on the technology and connection online would have been a little bit slower. Some people said that it would have taken 10 years, but because of COVID, there was no option. So people have that change in just 1 year. So it was more like a revolution. It was fast. Otherwise, usually, if we see in our society, we evolve. This is the evolution. Slowly it happens. Or sometimes it might take an entire generation. For example, after COVID, this telehealth, online consultation had become normal. Otherwise, it would have taken a longer time. Just continuing with that, we have scenario planning, another aspect. What is scenario planning? Scenario planning is technically is like what if analysis. This is again done to see the changes that is coming up in the market, the strategy, or maybe kind of disruption also. So here we are looking at the future, and if you are saying if one future changes, how it will affect other changes, other areas of the business. Maybe one change is about government regulation, or maybe let's say economic downturn, anything. Identify high impact, high uncertainty factors in the environment. So obviously we look at the high impact key areas, not other areas, which can affect our business. So scenario planning in terms of risk. In scenario planning, it can be in terms of strategy also. What should be our strategy? Both the places it can help. Yes, Mr. Bhagat.
So just going to the previous topic, sorry,
Yeah.
I'm going back to the old one. Some doubt. See, when we were discussing about merger and acquisition, I say we do more things like that just to avoid disruption. See, maybe one of the reason for merger and acquisition can be your disruption, but today maybe in service industries like what or your outsourcing industry where we have the mergers happen more to create value add also. For example, see today I'm providing services, financial accounting services and other consulting. I want to be a one-stop shop place or where I can say whatever work you're doing, though I carry the expertise, I can do it more faster by developing new technologies and all those things. So it is not only disruption, but also to have a value add creation, weekend acquisition also. It becomes easy to sell and you can stand out little different when you compare with the competitors. Maybe the same thing, but told in a different way. I don't know. I thought it came to my mind, so I thought I'll check.
You are saying mergers and acquisition can help in surviving disruption?
Mergers and acquisition are done not only to avoid disruptions or to manage disruption. It is done to create value and value-driven business and increase revenue or increase sales. To stand out differently when you compare with your competitors.
Right. Yeah, that's a very good point. I mean, correct point. It is not just for the disruption. Disruption is one of the advantage. There are so many reasons where this is done. For example, nowadays companies are doing this acquisition just for the data.
Right.
Like marketing companies. I think I was just giving an example of Denso International. They have done a lot of acquisition just for the data so they can do a target marketing. Now, if you open YouTube, all of us will be getting a different feed. So our profiles are there with these companies. They know what these people are looking at. For example, now we are talking and our devices are listening. So after this session, if you go online, we'll get advertisement regarding this. We will get an Amazon thing. We don't know. Now looking at the scenario planning as we discussed, it can be a part of risk management also, it can be part of strategy also. So basically here we are trying to be proactive. If you want to look at real world companies, we have Shell. Shell is one of the most successful company who have benefit from scenario planning. Otherwise, this can be very important to get a stakeholder trust also. We are assuming how things are interconnected. For example, now oil companies need to do more scenario planning, looking at the current geopolitical situation. And now looking at the scenario planning, if you look at logistic companies, airlines, they're also very much impacted with the oil price. So they have to see how one change in the industry or the geopolitical situation can have a knockdown effect on the other areas. So therefore, what we are doing in the first step, identify high impact, high uncertainty factors in the environment. Not general environment, our business environment. Then for each factor, identify key features. If this happened, what is the scenario? If that happened, what is the scenario? Let's say we have got 6 points, high impact uncertainty. Then we are getting 6 different futures for it. And out of that 6, we might see, okay, we can make it into 2 categories or 3 categories. That's the next step. Cluster together different factors to identify various consistent future scenarios. Write down the scenarios, accept the scenario kind of. Then for each scenario, identify, assess course of action for the firms. So this step, we are very serious. We are assuming that, okay, this is definitely going to happen. So we are investing time, money and resources in that. And the problem with that is many times that may not happen, but still we are ready to invest in that resource. But if that happened, we don't want to lose. If it doesn't happen, it's fine. We are ready to lose that resources. We have done cost and benefit analysis. Then monitor and revise. Within some time, we'll get an idea whether that will happen or not. If you're not sure, then we can take out the things, or we can just twist it. The biggest problem with this or downside is many scenarios what you have selected will never happen because we are kind of pessimistic when we are doing it. That's the biggest downside, costly and inaccurate. Therefore, a lot of companies might not want to do scenario planning, or they want to just have it on the paper. They don't want to invest resources before anything serious that might have happened. For example, many times we guys might think, let's say you are deciding for your business as a CFO, we might think, okay, paying for the insurance is a problem. It's taking up a lot of money and it might not help. But unless otherwise companies into that situation, all of them will be regretting, okay, we should have an insurance. Otherwise, we cannot afford to pay this from the pocket, right? Something similar here on. Other thing, tendency for culture distortion and for people to get carried away, the risk of self-fulfilling prophecy. Many scenarios considered will not actually occur. Upside, focusing management attention on the future and possibilities, creative thinking. It can help to justify decision because some decision might look very weird or the stakeholders are not very confident why we are taking it. But using scenario planning, we can justify. Communication will improve. And we'll consider external environment. Many times the companies are carried away with their current situation. But when we look at scenario planning, we are considering an external environment. Make sense? So what type of question can come here? They'll say in our company, if you do scenario planning, how it will help. So usually, as I said in your SCS, it will be more of a discussion question. So you need to know the advantage and disadvantage of everything. And honestly, most of these are logical. You don't need to try hard, even if you see this one. And we can always add some advantage, disadvantage from our own understanding. That's enough. It's very rare that you have to buy hard or mug up certain things. If you understand the basic concept, then you can always explain your own words. And that's what is our aim. Okay. Any question? So just the last topic for today is game theory. Game theory, or sometimes is also nice prisoner's dilemma, that name comes in. So basically both of that, we are trying to understand how the competitor's strategy or competitor's position can affect us. We cannot just do business based on what we feel. Why competitor can have a very big influence in the business. Let's say you have come up with the product, a new innovative product, and you're even reduce the price, whatever the market is expecting. Let's say 25%. But the competitors come up with something same and they have reduced it to 50%. We have lost that strategy. Let's say they have just come up with 30%. So game theory is concerned with interrelationship between the competitive moves of a set of companies or competitors. As such, can be useful tool to analyze and understand different scenarios. So basically, here we try to understand what the competitors can do. If you come up with a strategy and they come up with a counter strategy, we are losing it. Especially in the market which is very much saturated, it can be a major problem. For example, if you see in a supermarket, there is a price war going on because people choose a supermarket which gives them the lowest price. Otherwise, all good supermarket will have a good location. They'll have a good product mix. So what they do, they advertise. They advertise on the basic necessity. So two key principles they are talking about here. Strategists can take a rational, informed view of what competitors are likely to do and formulate a suitable response. The key thing here is likely to do. It's like predicting the future. Very difficult, isn't it? Or we can say it cannot be accurate. But we can have some idea based on the past. You know how risk taking the other companies. We can get an idea what resources they have. Therefore, if you see in the pre-scene, they always give us the numbers of our major competitor. So if you know their financial situation, you'll get an idea to what extent they can do. Plus, obviously, we know what they have done in the past. or we know what kind of board of directors they have, it will give us a decent idea. Because we don't want to come up with a strategy which is making our competitors to dominate us. We want to come up with a strategy which is helping us to dominate the competitor. Because honestly, if you see, most of the companies are providing similar services, a similar pricing, but just the strategy or how they are positioning their product will make a massive difference. So if a strategy exists that allows the competitors to dominate us, then our priority is to eliminate their strategy. We don't want to get dominated. But the problem is here, like they have said, if there's a price wars and both are reducing the price, nobody will accept the customer. However, there is another practice that is going on in the market, especially where 2, 3, or 4, 5 companies, they are dominating the entire geography, entire country. They are increasing price simultaneously. They are competing outside, but internally they are friends. They are deciding on price behind the doors, and all of them will increase price at the same time. So nobody loses except the customer. That's unethical, and that's where government need to intervene. But still, in most of the countries, that happens. It's totally opposite. So if you see from business perspective, like here we have to see from business perspective is beneficial for us, but that can be unethical. So in short, keep a close eye on your competitors, because whatever you do, if they are able to predict it, they can always dominate. A good strategy can become a failure. Another thing is stress testing. Stress testing is nothing but how to cope up in a difficult situation. If you see your exam, the case study exam itself is a stressful situation. CIMA wants you to go through this stress test, because in real world you won't be making so many decisions in this 3 hours, but here you have to go through it. Then only you'll be a qualified chartered. The same thing in the business. If you are losing a key customer, if you are having a litigation, how will perform in that? In fact, many times the managers, or you must be doing with your own team, how they'll perform in the stress. In a normal situation, most of the employees can perform, but in stressful situation, very few people can perform. In fact, if you see at personal level, what makes somebody a successful in any field is working under stress. Or instead of stress, we can say pressure. Stress can be a negative word, but pressure, like it may be month end, quarter end, year end, or the deadlines, or managing stakeholders, it can be stressful. Like to answer now can be easier, but when you're in the exam, the clock is ticking, it can be stressful. It can be pressure. But there is no other option. We have to work in pressure. So we should be ready, we should be proactive. Prioritize who is our primary customer, what is our value, measurement for performance variables, productivity, how we are doing, how we are generating creative tensions, how employees are helping each other. Like COVID was a situation where companies were in so much of stress. So the companies with good culture, they were performing better than the other companies who don't have a good culture. Because when it comes to stress, everyone is struggling with their personal things. They will not even look at others, or they are trying to get benefit from others' problem. What strategic uncertainties keep you awake at night? All of this is part of. I know there is a lot of information. This is one of the biggest chapter. But the good part is you don't need to memorize as such anything out of it. It was more about understanding. It should give you a clarity of thoughts. Okay. So please have a read through this again. And if there is something important or anything, you can add points. Ideally, you should be able to give examples, real world examples. Make a note and make an example for that. So things will be easier. So in tomorrow's session, we'll start with reputation risk. Reputation is comparatively easier. The important can be the corporate governance. That is chapter number 5. And again, we are having a definite question coming in from there. If we can read it before the session, then we can have a better discussion, and obviously we'll discuss exam questions. Okay.
Sure.
Thank you. Yeah, Misbah.
All right.
Thank you, Musbah.
You're welcome. See you tomorrow, same time.
Thanks, Misbah.
Thank you, everyone. Thank you, Ms. Ba.
I